Good morning, everybody. Welcome to the Flow Show. A new week begins Monday, 9th of June. Hope you're doing fine. Just me today. Came in still off for a couple of days over in sunny Belgium. Well, I hope it's sunny anyway, but that's where he's at. So yeah, I'm going to see if I can drag my old mate, Mr. Brown, in for to give him some abuse later on this week. I'll finalise what date today. Right. Anyway, we'll get started over whatever news has been out, and then we'll take a look at what's coming up this week. Let's get rid of my mugshot first. Starting off in China, we've had some data overnight or over the weekend. CPI, PPI data coming out there. CPI still in the negative, down 0.1%. This has really been a bit of a problem for China of late. As you can see there, we've been running very, very negative through the last few months there. So that's not looking good. Rate cuts and whatnot so far not helping on that front whatsoever. PPI data as well also coming in worse than expected year on year, down 3.3%. Excuse me. Trade balance data looks like it might have settled down a little bit compared to the month before. This is still probably very, very heavily influenced by all that trade stuff going on. As you can see, exports there still coming in a chocker amount. Imports down 3.4%. So as I said, you can see there, although we're running at some high numbers, and we can still see the difference coming in amongst those import-export numbers, still showing the difference there, but the number itself coming in pretty steady overall. Japan got their final GDP number for Q1, and a bit of a surprise because they were running at 0.2%, or sorry, minus 0.2%, came in flat. So not a loss in the end on that final number there, though their annualized quarter-on-quarter number coming in at minus 0.2%. We've had further headlines about what the BOJ might get up to with its bond stuff. They said, these are all sources stuff, they said to consider smaller reductions to its bond buying. A new bond buying plan would last to March 2027. And apparently the debate centres on quarterly cuts of 200 billion to 400 billion yen. This is something we might get to hear about at the next Bank of Japan meeting. PM Ishiba's also, he's been doing a lot of talking. He seems to be playing a bit of a bad cop role in terms of the trade stuff with the US, saying they're going to fight to protect their interests. But meanwhile, ministers are looking for their 6th, 7th, whatever number it is, meeting with US counterparts. He also said, though, that Japan is entering a structural phase of rising interest rates. So this is further moves out of the decades-long deflationary spiral, low rates, moving into higher rate situation. Another source is piece also saying that the government may also step in to buy back some super long-term JGBs. Again, this is all sources stuff coming in at the moment, but that's what's been touted around. That's one of the reasons why the yen's seeing a bit of strength today. What's not good news for Germany, though, is apparently the Japanese sold the most German bonds in a decade throughout April. So as much as we've been seeing a rush out of US bonds and a lot of money perhaps going into Europe, not from the Japanese, it's not. So keep an eye on that. Might be one of the reasons why we've been seeing a lot of action in euro yen. RBNZ's Conway says lower rates are to boost growth later this year. The labour market may be softer than the jobless rate suggests. BOE's Green says disinflation continues, but risks remain for the UK economy. ECB Centeno, he's on the victory lap bike, should we say. I don't know what an 8-man bike is called, not tandem obviously, but he's on that bike. It says we have successfully overcome the inflationary process. It says monetary policy is in a cycle of reducing rates, and all data indicates the cycle will continue in 2025. It says euro area inflation will drop further and approach 1% by the beginning of 2026. So he's very dovish, Mr. Centino. But he says later on after that that the rate cycle is probably stopping and stabilising. ECB Schnabel says persistent components of inflation are easing, but some figures are still off target. Kestrel Casimir says, I think we're nearly done with, if not already at the end of the easing cycle. So it's even one of the big hawks saying that the end of the easing cycle, he's been happy to vote for cuts thus far. Data through the summer will indicate whether further fine-tuning is needed. That's code for we're not going to do anything while we're on our holidays, and then we'll see what the data is and come back and maybe make some decisions. So he's already planning his jolly up. Coming back to the data yesterday, Friday, they're going over the NFP data, and yet again, another solid set of numbers. 139,000 was the NFP number, beating expectations 126, so we're still not seeing any rollover there. The unemployment rate came in unchanged at 4.2%. So that was even as the participation rate dropped, which can take people out the market. So it was a minor negative 4.2% if you take it from that side of things. Wages, though, that jumped back to, well, it jumped back to 3.9%, but last month was revised up anyway. But it still beat expectations of 3.7%. So we've still got pretty hot wages, sticky wages around close to that 4% mark. No wobbles in any of the numbers. We always keep half an eye on the government jobs just to see if anything ticks through that we don't know about. There wasn't much to go on there. Government payrolls just fell 1,000. All the rest A-OK. Canada jobs as well. That came in a positive. Was expecting to lose just under 12,000, but it gained 8,000. All of that, or the balance of that, was in full-time employment, which is what you want to see, a healthy 57.7k going in there, although it was offset by 48,000, just under 49,000 part-timers, a reduction there. Unemployment rate did tick up to 7%. Their participation rate stayed unchanged. Their wages unchanged as well, 3.5% on the hourly numbers there. Year on year was the same as well, 3.5%. That was it from the US data front anyway. So another, as I said, solid set of numbers for the Fed. Rate futures traders see 2 Fed cuts this year in September and December. Citi have decided to revise their call. Now they don't see a rate cut coming in July from the Fed. They see September. And they still expect 3 cuts this year, total 75 pips, September, October, and December. That was after the NFP data. And they expect the Fed to go for 2 more cuts early in 2026, January and March. We've had a few Fed heads out as well, as you can imagine. Fed's Hamac says he's heard that rising angst from businesses, but they have no immediate plans for layoffs. Fed's Harker says amid uncertainty, rate cuts later this year is still possible. He sees a steadiness in the latest solid jobs data. While people are messing around with their forecasts, JP Morgan Chase has also done a bit of a 180. It's reversed its outlook for US stocks. For the S&P, it did see S&P hitting 5,200 by the end of 2025. Now they've gone the other way. Now they expect it to close at 6,000 at the end of 2025. Probably another 200 pip wobble in stocks, and they'll be revising that once again. China. We've all got this nicey stuff going on with the US. China has, or is supposedly going to be granting export licenses to rare earth suppliers of the top 3 US automakers. These licenses will be valid for 6 months. This is the barrel that China's holding, or the US and everyone else over at the moment. There are apparently going to be some ongoing talks between China and the US in London today. There's all sorts of waffling going on. It's London Tech Week or something going on, so there's a lot of people heading over here, but there's going to be some more chinwags going on there. So overall, we're just seeing a bit of easing of trade tensions at the moment, which is all good. But let's see how long they last. Lutnick is supposed to be coming over for those discussions. That's about it. I've got on the news front, not a lot going on really. Nothing that's really market moving anyway. So we'll have a quick look at what's coming up this week. Hello. Oh, I've just been waffling on. Sorry, I had a little bit of a issue there. My microphone. I don't know if I've caught the same bug as Kay. Right, let me take it back then. Sorry about that. Don't know what happened there with my mic. Right, so I was waffling on about what's coming up this week. So let's start there. No real central banks on any of the majors out this week. That's all next week. We get the Fed, BOJ, and the like. So a bit of a quiet week after the NFP week. So not a lot out today. We've got wholesale inventories, flash numbers there from the US. On Tuesday, tomorrow, we get the US labour market report, jobs report, which we're still messing around with our data over here. They even managed to fuck up the CPI data the other month or for last month. So a real mess going on there still, but the numbers will be what the numbers will be. Not much else out on Tuesday. Wednesday, we get Japanese PPI data and US CPI data out. So that US data is going to be the first May data for the US. So we'll get to see whether any people are going to be changing their Fed expectations yet again. That might be one of the more market moving numbers we get this week if there's a big variation. Thursday, more data from the UK, monthly GDP, industrial production, and some trade data. Then the US follows up with PPI data, which obviously comes after the CPI data. So that might add or subtract from whatever we get from that US data on Wednesday. Friday, a little bit quiet, final inflation numbers. from some Eurozone bods as well as industrial production. And then it's the Michigan data on Friday, and that's it. So a bit of a quiet week. So it's probably going to be we're getting lots of news coming out from Trump, trade, everything else going on in geopolitics. Let's hope it's not as funky a week as last week in terms of kicking off. So that's it for this week, at least. Right, let's get stuck into prices. And apologies as well if there's you hear a little bit of racket in the background going on here. That's because I'm having some work's done around the house. So a lot of trees and stuff being cut down. So if you hear a bit of racket going on there, you know what it is. So apologies for that. Right, where should we start? Well, let's start with the yen, dollar yen, because we've seen a decent rejection from Friday's test up around 145. This was a level I was looking at, and myself and a load of our roomies jumped into shorts into that level up there. If you want to see a level hold, if you want to see the techs do their thing, you won't get more perfect than that, and that's always what we like to look for when we're trading the charts. So we've pulled back to 144s. We have had a little 2-pip nudge under the figure. We've had these little pokes below, but this is holding up for now at the 144 area. It potentially done enough since Friday. We might need some additional news to take it lower. As mentioned, this stuff going on with bonds in Japan, the BOJ, the government now, maybe, it's all sourcey stuff, maybe looking to do something, helping the yen lower as well. But we've also seen US yields dipping back as well. We did have a little poke up in tens above that 450 level. That I'll keep my eye on the chart there. We've pulled back to 448. Not a huge rejection, but that's another bit of input for dollar yen as well to take care of. So dollar yen, yeah, it looks like we're pulling up here at 144 at the moment. So if we do hold here, I wouldn't be surprised if we see a bit of a bounce. That bounce is likely maybe to the 30s, maybe up to the 50s. And then maybe we just go into treadwater mode until we get the next headline or bit of input that we need to get this moving again. If we do move under 143 though, and it starts to hold, then we're probably going to be heading down to 143.5 again, just testing some of these old levels, 20s. And we've got this rising trend line coming in, which we seem to be respecting pretty well, even if we do get a few volatile little nudges underneath it. So keep an eye on that. Comes in today's money 140 to 90-ish. So just keep an eye on that if we do break down that far and get through the 143. But as I say, I wouldn't be surprised if we pull up here and needs a bit more now to keep going. Dollar CAD, still keeping a beady eye on this one after I failed to get some decent money out of this one trying it here. Still managed to get stopped at the low of the day on Thursday. We're still not out the woods, I don't think, here at all. The bounce, 137 struggled on Friday, and then we're giving it all back again. So this could be a bit of a tipping point. If we come down to this 136.50 pretty quickly sometime today, that would increase the chances that we're going to break. But if we do hold it again, then that might give it the springboard to push a bit higher. Now, I'm not expecting this to shoot up to 139 or anything, but it could mean we break through this 137 area, at least go and test this 137, 30, 20, 40 area, all this traffic zone in here that we've had a bit of messing around, prior highs up there towards the 40s. So yeah, another hold here, we're probably heading there. If we do break through here again, this low last week, 32, 35, well, let's put it right on. It's at 35, I can tell you that, as I said, because that's where I got stopped. Close enough. Anyway, if we do break below that, then we do have the possibility of heading much lower, well, at least down to the low 136s and my zone that I've got down here. But I'm also keeping an eye on a bit of a pivot zone, well respected when we've been there before. So that will be the next traffic area down there if we get there. The pound's looking a bit more perkier than the euro today, just slightly. We're still not too far off these prior highs in the 136s, so we're not dipping back too far. Euro is pretty much doing the same, though we haven't got on to test these highs, whereas cable's made new highs, but we're not going too far from this 115 level. So we're still keeping this uptrend going, and we're still in the bigger yearly uptrend. And at the moment, looks like we're walking along the 55 H4 moving average while things are pretty quiet. So again, I would not be surprised if we put another test in on 115, and then I'll be very careful if you're thinking about shorts on that, because that will be a quick return. And if this trend is going to keep going, even if we break that high by a few pips, that will just keep the momentum going, and then we could be off and running. So I'm looking. I didn't bother with a short last week. Just the price action, I just didn't fancy it, but that would have been a decent trade anyway. But I'll be less reluctant to give it another go unless it confirms pretty solidly again. But even then, I would not be expecting pullbacks to be that deep. And this 114.30 area, we're just knocking around. We've had times where it's resistance, then we break. We can't seem to get a hold above it. If we do get a hold above it, then maybe that's the springboard that will take us up through 115. Otherwise, just look for a bit of ping pong down to here. If we reject there again, come back and hold this 30, move back up, then that's potentially a break trade I'd look to go with. Because then if we break 115, we're probably off and running again, at least towards these prior highs in the 115.70s. Aussie dollar, that's looking pretty constructive as well. Friday we had a pullback to the 64.80. Another one of these levels that we just been testing and tried to hold. But that looks to be a decent step up after we had this holding around 64.40s. So we finally got a decent amount of support there. Then we got the bounce. Then it's held the next level. Now it's holding 64.90. So again, this is like what I'm talking about with euro dollar. You get these highs, get another high. The dips are shallow, come back quickly. This could be the one that goes through it. Still a lot of work to be done though, because we've got this 50% retracement just up here. Sorry, the 61.8 at 65.50, which is also a bit of a prior level, just around that of these prior highs, 30s through to that fib. So if we break here, we have got another level, 65.70s, but I would think, given how long we've spent messing around, if we do break here, we might be going through that pretty quickly and heading up to 66s. So it's been a bit of a slow burner, this one, but it's still maintaining this rally off these lows and just creeping up higher still. So yeah, quick test up here of these highs. We're probably going to have a crack at going higher through there. Dollar Mex, again, lots of people trading this one in our room. We're still on the creep lower, still hunting out that 19 figure, which could be quite important. It is a prior level, it's a psychological level. And if we get a first test there and it holds, then I wouldn't be surprised if we see a fairly decent bounce. I want to see this 18 level, 17, 18 level holding. It hasn't done so recently on any of these bounces, but I want to see that happening if we do get a bounce off this 19. Until then, this 19, 24, 25 is the main level above. So I would not be surprised if we see a bounce off the 19 that gets us back to there, maybe even to the 730s. Who knows? Depends on what's driving it. But just for anyone else who's trading this one, I'm going to go into the super long. The 1850, been banging on about that as this is the major level, and it is a humongous level. Let's put it on a weekly. So it goes all the way back. You can see it was a huge top back in 2023. Well, it was a huge bottom when we were down here, as you can see. And all this move in here as well. Then we had the break. Straight after the break, it held. And then we held on a retest. and then we had this move down, and then we messed around a bit, and then straight after the break up, we held it again in there. Let's just zoom it in. So we've got a bit of a way to go yet, but if we get under 19, this is going to be in the crosshairs, and this will be a big old level. So just one to keep an eye on if you're trading that as well. Now, I know a lot of you, before Derej asks, if he hasn't already, gold. Bit of the easing tensions going on here between the US, but we've been talking about this last week, the 30 level. It's just a level that's seen a lot of action recently. And here we are with a breakdown under. And look, we're holding it. First test this morning, and we've held it. So we know where the ceiling is for now. China's still a buyer of gold. We know that. The PBOC back in, still buying, I think, the 6th or 7th month now. They've continued to buy gold after their little pause. As I say, these easing tensions, we're not China, US, not at each other's throats at the moment. Just seen a bit of easing, but it's not putting back anywhere. It's not undoing any of this risk rallies and all the other stuff. So the dips are still fairly shallow. We're still probably in a bit of consolidation going on. We had a little mooch under 3,300, but it couldn't get too far under there. Again, price action, if we get another move down to 3,300, watch if that breaks, because if that breaks, we're probably going to head down and test this zone 50s, 60s, near 70, where we've had a bit of traffic previously for support and resistance. Upside, if it gets back above 30, we've had this 33, 65, 70 area that's seen a bit of action. So watch that level. These are the sort of levels you want to look at if things are pretty quiet and we're just, we're not moving on big headlines. We're just, prices just mooching around. Those are the levels that probably going to hold while it's quiet. But, any big headlines and we break whatever way. But we need to get it back above there to even start taking on the 3,400 level again. And this high from last week. For those of you trading silver, and I'm not, but I'm keeping a close eye on it, we've made a fresh high today, so it's not yet ready to top out. So if you're trying to short this one, be careful. It's not dipping back too far. We're still playing guess the level. So just seeing where the price action wants to pull up, you could probably stick one in here just now for your support level, purely because we had this high, we then had the high again, then it broke, and now when it got under, we was holding it. So this is just maybe a little bit of a pivot area to keep an eye around that 36 figure. But otherwise, nothing for me up here until we at least confirm over the course of a few sessions that we've got a top that we can't get through. So that'll mean looking at something maybe that we get another move like that holds somewhere like that, and then you might get a steeper pullback. But yeah, this is all about just watching and waiting and see what the price wants to do. I'm certainly not going to start guessing what the price is going to do from here. So if you are looking to short, just wait for that evidence. If you're waiting for a pullback, though, you've got to be careful. Keep trades potentially tight. If you're going to try 36, 36.05, then you're going to be wrong probably through 90, 85, 90. You don't need to give it a lot of room. Okay, you can scalp around this if you're on the long side. Try and sit in a position if it stays your way, and then see when we're going to finish with the highs. But short, same thing. Don't be going out on a limb trying to be a hero in this one. Right, well, you guys are all very vocal when my sound was off. Let's have you be a bit vocal about some of the stuff you want to look at. Otherwise, it's going to be a pretty quick show today, which I don't mind for a Monday, because I'm always useless on a Monday. Let's look at, we looked at the euro, looked at cable, quick look at euro sterling, Guppy, yep, I'll have a look at that. No, Bitcoin, bloody hell. Right, we'll have a look at Bitcoin in a moment. Quick look at euro sterling. Still struggling up at this 50 area, but not pulling back too far. We are just mooching around all these prior lows, 20s, 15s, 10s around here. As I said, cable is looking a little bit perkier than the euro today. So we could have a bit of a speed move here where if we get some more dollar selling coming in, then this could be heading a bit lower, or conversely, we get a bit of dollar buying coming in, then we could see cable holding up a bit better than the euro. And again, this might mean we're going to head a bit lower. I'm still a little bit short, still waiting to see if I can actually take some money out of it. But we shall see. Guppy for Derej. There's probably no real change in this one. No, not really. We keep having these little pokes above, but they're not holding it at the moment. So that's the main level. But until you see it holding above here, then this is turning into quite some top up here, potential triple top developing up here, which would potentially lead to a steeper breakdown, maybe getting down to the 191s. But as I said, the pound's looking a bit solid today. So if we do get another quick move up, we might go on to attack those 196 highs. Or if you see a move back above this level and it starts to really hold, then that's your cue to, if you want to go long, kick on and see if we can go much higher. Right, Bitcoin for Nuno. Probably one of the only times you'll ever see Bitcoin going on here, because I really don't care about it at all. So what you're doing, Nuno, you're making your fortune in the old cryptos. Let's have a look. So I've got no tickers on this whatsoever, and what I have is probably well old. There we go. Yeah, I don't know what to make of this one, really, because I'm not really looking at it, so I'm not really charting it. So if I had to pick some levels out the hat, probably looking around here, this 101 area. Look across these prior tops, which have, we just can't seem to close above that 109 and a half, 110 area. So that's your ultimate level. This is where you want to be looking at support. If we're moving back under there, 101, whatever you want to call it, 101 level, then we're heading much lower. Otherwise, yeah, it's still pretty bullish. It's been pretty bullish since April. Trump's still happy bunny with cryptos and getting ETFs up and running and everything else. So there's no real reason for this to come careering off for any time. You're looking for a short. I think you've got to be careful if we're getting back above this 107 area, then we're probably going to put in a test of these highs again. But if you are looking for a short, what you want to do is see a run up here failing into that 111, into these prior highs. You get a failure somewhere around 110, 111, then that will probably give you a bit of a chance to get in a pullback, maybe back down to the 101s. But I'll just watch. Let's stick a line in there quickly. I'll just watch that area there. If you break up here, if we pull back to there, 106s, and we hold there, that's going to keep this momentum going. And then we're probably going to kick on to a new high. Mr. Fox, dollar Swiss. Where are we? Can't even find it. It's up here somewhere. There we go. Can't seem to decide what we want to do around this 82 level. We are back above 82, 81.90. So it was looking a bit weak last week when we had this breakdown. Dollar getting a bit funky, but we haven't really held it, and we're back above. We're messing around. We're holding it just now, so that's a bit positive. We're limited to 82.50. I was thinking about maybe having a trade here, but I've held off. I was going to see if this move got us down to the low 81s and give it a go down there. But I don't think I'm going to trade around here at the moment. I would, if we break here now, then we're probably going to be heading down here. Then I'll look at maybe trying again down here, depending on what the mood is in the dollar elsewhere. And why we're going down there. If something's funky going on in the US, I'll be less inclined to give it a go. But overall, it's not looking all that bullish. But if it does hold here, you probably will at least get 82.50s, maybe a bit more if it puts in a decent performance there. What are you doing on that, Fox? Or should I say David? I'll call him Fox because we've got another Foxy in our room as well. What else? What else? Oil. Which oil are you looking at, Stephen? Let's look at US oil. Yeah, it's looking like it wants to have a little mooch up. This is quite an important area. It's an important area on the way down. And if I'm not mistaken, if we come in longer term, you can see it's part of a whole big zone going on. I think it goes even bigger than that. Oh, I could be mistaken. No, there we go. So this area 65, 66 has been a big old level going back a few years. So yeah, this is a bit of a moment potentially for oil. Anywhere from there through the zone, 65, 66, 67. Okay, if we bang into there and can't get through it, then that's not going to look so bullish. But I'm still a little bit of a loss because we've got this OPEC stuff going on where Saudis want to increase production and blah, 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 blah. But the demand picture, at least if we go by the manufacturing data, isn't looking like it's going to be doing anything much. Although you've got to think that all this defence spending will lead, particularly in Germany, might lead to a bit of a production boom on that front, which will be bullish for oil on the margin, shall we say. But here's your big key area there. Dips anywhere down to 62, 61. That's your first support area, just in against this prior action down here. That's what you want to be looking at if you do want to be long. But I mean, I certainly wouldn't chase it up here unless we're breaking and holding above that 67 figure. And then, because that will potentially give it a kicker on. So what are you looking at, Stephen? Long, shorts, sitting on your hand, or whatever? Iron nut. Thinking why not buy Aussie Swiss? Oh, I haven't got Aussie Swiss in the thing. I'm just going to chuck it in here. Let's have a look at that one. Aussie Swiss looks to be in the same boat as dollar Swiss at the moment. You're right on the level here. 53, what are we? 53.50s. So you've had this throughout May, bit of resistance coming in here. So if you want to try the break there, fine, go with it. Either take a break as it breaks through, or wait for a retest. Maybe it goes to 80 and comes back to 50, 55 and holds 60. Then that'd be your confirmation. If it holds there, or you just try a tight one and just be careful if it reverses back under. So that's not one. That's one to keep an eye on as well, owner, if you're thinking of trying along there. If you've missed, well, you can't say you've missed Aussie dollar. You may not have got your entry. Oh, what's that going on? If you've missed an entry in it, then, as I said, you can go with a break in Aussie dollar. Okay, you don't need to always buy a dip to long a pair or get long. You don't always need to sell a rally to get short. You can trade break trades as long as you know where your risk levels are. So if you wanted to, put a trade in, if you're breaking this 61.8, maybe 50.55, or you wait for it to break and retest that level, and then you get long. But, don't cry over spilt milk just because you weren't long from lower down. There's always other ways of getting into a trade. Michael, Euro Aussie. Let's see what's going on in Euro Aussie. Let me have a bit of a wide look on that one first. See what's going on. Again, you can see the last time I was doing techers on here. So we've got this area coming in where we got it 77s, 177s. That's your sticky point at the moment. That's good enough for government work. You may be able to take it a bit down, 146, 1.76 and a half, 76 and a half. So that sort of area. Bear flag. Yeah, I can see it potentially. Does look like it might be breaking on that front, but don't know, when you've got the euro involved, and the euro, we know the euro is fairly well bid, but the Aussie, could it be getting a bit ahead of steam? Are you short already? If not, you know where you want to be, trying to get short. If you are, and again, if you want to chase it lower, then you probably need it to be getting through that sort of area, 174s, 173.90s. Get through there, and your flagpole for wherever it may go, what will that be? 168s, perhaps. If you're taking the measured move, maybe a bit more than that, would get you all the way down there. But don't worry about all the way down there until you can get through all the way up here first. Frederick, any view on Euro TRY? No view on Euro TRY, mainly because a lot of people can't even trade Turkish lira. I don't know if anyone can trade Turkish lira at the moment, where they put it back on the screens. But Frederick, why do you want to trade Euro Turkey? Let's have a look at it. Strong trend. Yeah, strong trend. I'd say good luck with that. You're probably going to pay through the nose margin wise. You've got a lot of volatility in there as well. Yeah, I've not looked at the Turkish lira except as a just a bit of popcorn watching. So if you want a danger trade, go ahead, my friend. But there's plenty of other more sensible trades you could be taking as far as that goes. I wouldn't have no idea what the spread on it is, David. Have a little look on your platform, and probably wide as you can get 2 buses. So let me see. I don't even know if I've got it on any of my platforms. The spread's not too. No, I haven't got it. Well, I can't see it anyway. But yeah, moving on. Right, what's the time? Right, well, I think we'll call that a day, actually. And as there's not too much going on at the moment, and we'll get you set up for the week, and the guys are continuing the chainsawing in the background. So we'll call that a day for today. Thank you very much for coming to the Flow Show, and we'll see you all tomorrow. Have a great day. Have a great week. Catch you later.